Hi, welcome back to my channel. Today I am with one of my most favorite people, Miss Laci Cerrone.
Thank you.
Las Vegas gal.
Las Vegas gal in the house.
Yep.
Well, outside. We're outside. We're not in the house.
We are outside, but we are in Las Vegas,
Yes,
your
we
city.
are. Our city.
It is our city. Okay.
Today I think we're going to talk a little bit about investors and how the idea of investing can be a little bit of a big idea for a lot of people. Some people can't come up with the concept of having money, enough money to save and put down on an investment property along with their own home. You know what I mean? It's like
I think
question.
everybody wants to be an investor, but it's a matter of like how to be an investor.
Yeah.
So I think today we wanted to kind of cover how you can become an investor. And it is possible.
Totally
we see
possible.
A lot of people do it.
Yeah, so we're going to help you with some tips. Okay, Amber, I'm going to ask you, just because I'm not the lender in the house here, talk to me about loans that are typical for someone who wants to invest in a house outside of their state or even in the same state. What's the best kind of loan?
The best kind of loan is conventional.
Okay.
So when you're doing an investment property, all the other loans, like if you're looking at FHA, that's pretty much primary residence.
Right.
VA, primary residence.
Right.
So when you're looking at becoming an investor and buying your first investment property, it's going to be a conventional loan.
Yeah. Period. End of story. That's the loan, right?
That's the
I
loan.
even didn't know that before we sat down today, so I'm glad that I asked you. I thought there were a few options, but conventional is the way it goes.
It kind of limits your options when you're going investment property, conventional.
Yeah.
And then you want to talk about down payment too,
I do.
right?
That was my next question. So what should I expect if I'm a first-time investor? I've got a house already, let's say in Missouri. I have a house in Missouri. It's doing well. I've got some equity, all that stuff, but I want to buy another house. What am I looking at for down payment?
So minimum down payment is going to be 20%.
20% of the purchase price.
A lot of it, 20% of the purchase price. Yeah.
Okay.
So if it's a $250,000 house and you're looking at
20% of that. I don't do math in my head. See, she does math. I don't do math.
But sometimes a lot of investors will look at the 20% option and then they'll look at the 25% option because there's difference in rates. So you're going to get one rate at 20%, which is a little bit higher, and then you're going to get another rate at 25%. So I just always want to give those two options out because it does make quite a bit of difference in the payment.
So definitely think if you can go big, go big. Don't go home. Don't go big. But my question for you is, so how do the rates, and I know you can't quote rates today, but how do the rates typically compare between a conventional loan period and like an FHA or a VA or some of the others?
Well, conventional loans are usually a little bit higher than FHA and VAs. They have really low rates, but they have different mortgage insurance. Well, let's not even compare VA because VA's
a whole different ballgame.
It's the best loan out there, but you got to be a veteran to get this. So
they've earned it. They've definitely
earned it. Thank you for your service. But so the FHA loans rates are usually lower, but their mortgage insurance works different, so it's not always the best
payment.
choice.
Not always the best payment either, right?
Not always the best payment. Sometimes it depends on credit scores. You know, like it'll vary. Conventional loans, their rates are a little bit higher than FHA's, but it gives you options in mortgage insurance. When you're talking about like the difference in rates between, are you wanting like a primary residence versus a conventional loan as far as rates?
No, I just was curious if like the conventional loans already carry sort of a different kind of structure. It sounds like they do a little bit.
Yeah. And the big thing is that conventional loans, when you have higher credit scores, your payments are going to be a little bit better than like FHA loans because their mortgage insurance is so much lower.
And that's the big thing when it's an investment property, right? It's about money. This is a business. It's money, money, money. You got to focus on those dollars. Well, money in your tenant, which we can talk about another time. But really, if you're focusing on maximizing your dollars, you want to make sure that if you're thinking, oh, I want to get a lower down payment kind of loan, that's not going to help you in the long run. Having that money up front is really what's going to help you because you want that payment to be super small and the interest rates to be low so that you can maximize the money that you're paying every month, right? I love that.
It's definitely true. And I mean, a lot of times when you say that it's like, it's a business, you have to think about a business because sometimes people will call me and be like, because the rates on an investment property are going to be a little bit higher than primary, but right now the rates are lower than they've ever been before. So you're still going to be borrowing money at such a lower level than anything that you have before. So the amount of your payment's going to be lower so that you're going to be able to gain a little bit more. Does that make sense?
It's a lot, but I think it makes sense. I mean, I think the bottom line is as an investor, you have to look at it like a business and you have to know your numbers and don't let the 20 and 25% down scare you because the down payment's really not the scary part. It's when you do those low down payment kinds of loans, which aren't even available for investment. But when you do those low down payments for loans, your your monthly payment
up,
goes up because they're adding and padding a lot of insurance in there because you didn't have enough money up front to make them feel better about giving you that loan, right? Yeah.
And then let's talk about down payment next.
Let's talk about down payment.
Because that gets scary when you say,
so scary.
When you start throwing out 20%, 25%, it gets scary.
50 grand. Who has 50 grand sitting in the bank? I don't.
I know.
I would like to have 50 grand sitting in the bank.
That's a good goal. That's a good goal. We're going to put that on the list.
We're going to do that,
yes. Okay, so here's what a lot of people are doing right now, because when you're buying an investment property, you already own another property.
Right.
There's, right now, all the statistics that are out there, most everybody has equity in their property, especially
their current home that you live in, right?
Especially if you've owned it for a little bit. So a lot of people are calling me right now and saying, well, how much cash can I take out of my primary house? Mm-hmm. And then they're taking cash out of the primary house so then they can invest in another property, because really it makes sense, because housing is pretty secure.
And divide and conquer. Somebody always needs somewhere to live, right?
Yeah, exactly. Yeah. And rents are on the rise, so you can really make a lot of money on it. So one way is to just kind of cash out of your primary residence and then take that money and invest into another property.
That's a really creative way of coming up with that down payment. Like actually probably the most creative. Another creative way would be maybe like if you are watching your stocks and bonds dwindle in value, or you're just getting like anxious at what the heck's going to happen in the world. Yeah. It's okay to maybe pull that money out of the stock market for a minute and land it into a tangible investment like a home that can help make you money over time. So I'd say that's another really creative way to possibly get some money.
I think that's one of the good ways to do it.
That's a really good way, actually.
Right now that gives me anxiety when I'm watching my portfolios. Yes. It's giving me some high anxiety. So I know it's crossed my mind too. Maybe I should put it into real estate, and do a little bit more there, so you're diversified a little bit better.
Yeah, you diversify your income, you diversify your investments, and then you can sell the house whenever you want. At the end of the day, real estate's a long-term investment. This isn't about flip it, fix it, and run it. I know. It's not a quick it, fix it, do it thing, but the money is always going to be there. There's always going to be a return, whether it's now, 10 years from now, or whatever. So just keep that in mind, I'd say. But so cash out equity on your current house. That's a really easy way to come up with some fast cash. Cash in on those bonds and stocks, maybe pull them out of one market and put them into another, start a new portfolio of real estate.
You're just taking from one investment and moving to another.
Investing in yourself. Yes.
You are. It's beautiful.
What about 401k? I've had a couple of clients call me saying that they were thinking about cashing out their 401k. I get nervous anytime someone says that to me. I'm like, oh, hold on, there's penalties. You want to be careful. What have you been seeing?
Honestly, that's where most of the people I'm seeing right now, most people are taking their money from the 401ks, because here's what's happening during COVID. And I don't know if this is every 401k company, but the ones that I'm looking at, they have done this. So, you might want to check with your 401k company directly on this. But with COVID, they've taken away that penalty to take out to put on a house. Ooh. So you can actually take your money out due to COVID and put it as a down payment on the house. Or if your 401k says, we're not really doing it that way, you can always take out money for the purchase of a house, because your 401k knows that you're moving the money from one investment to another. So if you give them all the paperwork that shows, hey, I'm buying a house and I'll provide all the paperwork for the loan and stuff, then they're going to show that down payment towards the house. Smart. And there's no penalty that way either.
Wow. So, I didn't realize the no penalties thing. That's awesome.
I know. I think that, I don't know when that ends actually.
I don't either.
But I've had a lot of people do that. And there's a third way with the 401k too, because a lot of times people, they have it in there, but they they're, for other reasons, they don't want to pull out other ways, so they'll just take a loan on their 401k.
Yes.
And you're paying the loan back, at a cheaper interest rate.
Paying yourself back, really.
Yeah, you're paying yourself back every paycheck that you get paid, but at a cheaper interest rate. So you could take it out of your 401k with a loan too. So there's a lot of options with your 401k that you could talk to your provider. And honestly, a lot of people that are doing down payment are doing it that way right now. They're taking out their 401k.
Okay, I have to go check my 401k. I think we have one more though. I feel like we had one more. Oh yes. How about those people who have like money stuffed in their mattress, or like in a bank account, a savings account that only has like a 0.01 return on any kind of anything? How about those people? I always feel like there's some people in the world who they love seeing that big bank balance. They love that savings account that they can see and just feel good about seeing that big number. But that account's not really working for them. It's not earning you the interest that it should be. It's not working for you, right?
Yeah, it's not working for you. So a lot of people will, like your bank account.
Yes.
you know, the bank accounts gain so little interest on it.
Oh, it's so bad.
A lot of time, like if you just look at that money, because you're not giving it away, you're putting it into another investment. Right. So it's not like I'm not going to have it. You can look at the equity in your house as that other investment.
Right.
So
you change your mental state.
Yeah, it's just a matter of changing your mental state. If it's in the mattress, though, it's a little bit different.
Yeah.
So because the banks are kind of connected with the FDIC.
Yeah. P.S.
You know,
you can't hide money in your mattress for large investments.
Yeah,
it's just not going to happen.
So they're going to, any large deposit goes into the bank account, it has to be reported to the IRS and all that kind of stuff. So we're going to question on the loan side too. So if you're going to take mattress money and put it in your bank, you want to let it season for 60 days.
So that's going to take a little longer.
Yeah, so plan ahead on that. If you have mattress money, put it in now, and then 60 days later, give us a call.
And we don't want to know where it came from. We don't want to know any of that business. We just want to make sure it's in the bank long enough, right?
Yep.
That's awesome. I know that there's quite a bit of energy behind investors right now in Las Vegas. I know you're feeling it. I know I'm feeling it just as a real estate professional. What can you say from an advice perspective? What's one piece of advice you would give somebody who's investing? What do you do to invest? You invest a lot, right?
I do. I try to diversify. Oh, I wasn't ready for that.
All right, I'll tell you mine, and then I'm gonna let you think.
You tell yours, and then I'll tell mine.
My number one tip for you is do not assume that this is going to be something that you have to spend a lot of energy around finding the perfect house. A lot of people confuse buying their home with buying their investment home. This is a business. It has to return money for you. That's it. It doesn't have to be the cutest or the prettiest or in the cutest neighborhood. It has to bring you money. And in Las Vegas, we have a rental shortage, right?
We do have a
rising
rental shortage and a housing shortage.
And a housing
so it's a perfect time right now to buy a house of any kind.
Yeah,
it's
going to rent.
Yeah.
But my main thing is, take the emotion out of it. Really try to focus on the fact that this is going to be an investment. This isn't about the floors aren't cute and the walls aren't cute. Of course you want to rent a cute home, but at the end of the day, renters are not as picky as homeowners are. So keep that in mind. You can save yourself some money and stress.
Yeah, and if I'm looking for an investment property, I'm looking at areas of town.
Yep.
I'm more looking at areas of town more than I am
location is key.
Even like the floor plan. I don't really care about the floor
Doesn't
plan.
matter. If you don't like the kitchen, someone else will.
I
it's
will
okay.
pull up like how much you can rent in the area. So more areas of town is more what I'm going to look at.
Yeah. And it even matters to rent. Now listen, area isn't the number one thing. It's definitely a key component depending on what your investment plans are. If you never plan on selling this thing, buy it and be done with it. Just make sure that you have a renter in it at all time. But if you want to cash out at some point, really let that money come back to you, location's definitely going to play a bigger role. Those are the ones who will appreciate faster.
And I think, looking at ones that are not as old.
Correct.
Because you're going to get higher rents on them.
You got it.
Is what it seems like. So
this is
that's
good,
kind of what I look at.
I love it. Sorry for throwing you with that question.
I know.
But she gave such a good answer. It was totally worth it. This is your channel.
It was worth waiting a couple minutes
Totally
for it.
worth it. I had a great time. So thank you for your tips. I learned a lot. I hope you did
thank
too.
you for being on the channel.
This is amazing.
It's always a fun night when we get to be with Mrs. Las Vegas gal.
You know.
What's next? Some shopping?
I don't know. We're going to go shopping, but thanks again for inviting me to be a part of it. I appreciate it.
Thank you for being here. If you're thinking about investing, please click the link below and we'll get you set up with everything that you need. Anyway, thanks for watching and we'll see you next time.